There we have it. All right, starting off, one of the biggest business stories this week, the stock market crash. Numbers did not go up. It was not like the third year projections for all startups where you get the crazy hockey stick. It's smashing down to the ground. Since the beginning of April, the markets have been trending down. And obviously in the last couple of weeks, not looking too good. And a whole bunch of investors everywhere getting a little bit nervous. So to help make sense of what's going on with the markets, I'm joined by Paul Quickenden, the head of corporate development at Easy Crypto, to hear a little bit more. Kia ora, my bro. How are you?
I'm really well. Thanks for the introduction, Robert.
There you
go.
How
are you going?
I'm okay, mate. I'm okay. I'm over here, and in the States, and everything obviously in Silicon Valley and San Francisco is extremely tied into the the tech space, the cryptoverse, all this other crazy Web3, everything. So I guess the most obvious question to kick off with is everything going down? Why? Is there one answer? Let's start there.
Look, at a macro level, I think what we're seeing is the impact of the Federal Reserve starting to signal or actually starting to taper off quantitative easing, which was flooding the market with cheap money. And coupled that with the interest rates, investors decided that going out of risky assets like tech shares and crypto was a good idea. And it just kind of created a compounding run. And so that's what's happening across the board. You're seeing, all of the indices, the NASDAQ come down. You're seeing some of the tech darlings like Tesla and Amazon, get absolutely smashed. And Bitcoin has largely followed that kind of trajectory. In fact, it's almost exactly the same as those two assets at the moment. So that's kind of what's going on, broadly speaking. Everyone is just a bit jittery about what's going on. And, understandably, there is a lot in terms of us to digest globally with Sri Lanka, with what's going on in Ukraine, oil prices, inflation, all that sort of stuff.
All that good stuff when you look at the global economy. And, one of the things through COVID is, everything, the world shut down, everything went to zero. But all of a sudden as well, you were looking at how everything's connected globally, and a lot of people, they're seeing this and starting to sort of panic, and a few people are starting to sort of sell. Do you think this is a bad move for them?
Oh, look, everyone's in their own unique position, Robert. And so, the greatest investors in all time sort of indicate that you don't sell when everyone else is selling. But it really does depend on you and your risk appetite and, what's going on. I don't know, and I couldn't honestly say if this is the bottom for the share market or crypto. There are a bunch of people out there that are calling it. We're seeing in our particular marketplace, a similar pattern to what we were seeing the entire year, where buyers are just exceeding sales. We've had days where it's obviously inverted. So, the market seems to be saying, they are at good buy prices and dollar cost averaging in, or whatever their buy strategy is, but they are people sort of tapping into the lower prices on the hope that it will rebound sometime.
Or as they say, buy the dip. I've got a quick question for those that aren't necessarily too much aware of the sort of crypto space, looking at the markets, and obviously, in the States here, the crypto world's been going pretty massive with sponsorship everywhere. How directly correlated from your experience is kind of the regular stock market and, the NASDAQ, S&P and bits and pieces versus crypto world? Are they kind of overlap? Are they sort of, are they similar or not?
Yeah. Well, look, it's a great question. So I've been in crypto long enough to know that back in 2017, 2018, the narrative was we really want institutional money to come into crypto, and that will bolster its volumes and it will go on a new growth trajectory. And it appears that has happened. And the way that institutional investors and funds have done that is they've treated Bitcoin as they would a tech stock. And so I don't have the data in front of me, but I have seen some correlation work by Valkyrie Investments and those guys are research houses, and it is really high. It's like 90% correlated with tech stocks at the moment. And so in that light, no real surprise that it's trending the same way. There was hope that Bitcoin in particular was kind of a safe haven asset, a third asset class or fourth asset class, depending on how you hold your eyes. But that doesn't appear to be the case at this point in time.
When people don't understand, I guess, the crazy world that is crypto, the wild west of this unregulated bits and pieces that gets pretty nuts, but at the same time, there's a whole bunch in there. How do you best describe cryptocurrency to an average old mate Joe at the pub that has got no idea what you're talking about? How do you start that conversation?
How do I do it?
Yeah.
I talk about digital assets. I call it a digital asset, and right, it's kind of the evolution in a way. It can be the evolution of money, which started out as pieces of silver and moved to paper and then became digital. And this is just another evolution, or it could be a store of value. It depends on the actual asset underneath, but it's basically digitizing value is how I think about it. And the unique thing about it is that it operates on these things called blockchains, and they go 24/7. So, if you're in New Zealand and you try and buy stocks outside of certain windows, the markets over there are US stocks in particular are shut. They work sort of eight hours a day. Crypto doesn't do that. It's globally available. It operates 24/7. And so, and it brings some benefits, but it also, as you've said, it isn't entirely regulated exactly the same way. There is a bunch of regulation in the space, but it's not the same way as a stock. And so, that does mean it comes with its own quirks and volatility and that sort of stuff.
Do you eventually think that, governments and, obviously seen different places around the world start to really embrace sort of digital assets and stuff? At what point do you think, big countries start really either adopting or putting regulations around and stuff? Like, what's the solution to bring the big industrial sort of cash in? How do you see this playing out?
Look, I think it certainly has a bunch of regulation around it. So I don't know if it's not the Wild West that it used to be in 2016, 2017. It's certainly not that anymore. I think the thing that the big institutional funds are looking for is a Bitcoin spot ETF. There are futures ETFs at the moment, but I think they're waiting on a spot. And that's basically making something look like a square peg and they can buy it. They can't. Their fund structures and rules don't really allow them to participate freely in the crypto market. And as soon as you present something to them that those funds can, then I think that'll do it. But even then, a reasoned response would be to add a small allocation of crypto. Sort of anywhere between 2 and 7% or something like that, depending on the risk profile of the fund.
You obviously are pretty plugged into this crypto space while we're at it, and I'm over here too. I'm interested in your take on Luna going from like $120 to $120 to like 1 cent going off the peg in there. For those that aren't aware of that specific thing, can you give a quick macro and then your take on what happened there? Because a lot of people lost a lot of money.
Yeah, they did, sadly. Look, I'll give you a layman's take on it because there is some deep maths behind it that is beyond my understanding, but I'll give you what I can. So Terra launched with a couple of coins. One was volatile called Luna, and one was called a stable coin. And stable coins are supposed to be that, just stable. And they're normally pegged to the dollar. So, the biggest one on the planet at the moment is USDT. Tether, and USDC and all that sort of stuff. So it was trucking along pretty well. It was pegged to the dollar, doing a good job, and that was going gangbusters while the market was going up and Luna was appreciating. And Luna is the volatile asset as well as a bit of Bitcoin was sitting behind that were the collateral for that stable coin. Then this particular stable coin is not dollar backed, so it's algorithmically backed. So there's kind of a smart contract in the background going buy and sell this, redeem this, that kind of stuff. And what happened was when the market started going south, the algorithmic sell kind of kicked in and it started selling a lot of Luna into the market, which obviously depressed the price and created a vicious circle. And then the organization, I'll use that term, the foundation behind Luna started kicking in to prop it up. And they started dumping a lot of Bitcoin at the same time. And effectively it created a vicious circle, kind of a death spiral for that. And at the same time, a whole people obviously realized that was not great news and tried to sell, which created like a classic money run type of thing you've seen in banks and other countries where, the money's run out, that sort of stuff. And essentially black swan, death spiral kind of event. That would be how I think about it. And the people behind it are still trying to resurrect it, but it's looking tenuous at best, I guess is how I would say that.
Yeah. So basically $120 turned to 1 cent in a matter of days, which is absolutely insane. Totally.
Yeah, it is. And I really feel for the people involved in that, because they thought they were investing in a stable asset.
Yeah.
And it's classic stuff that we all say to everyone who gets into investing, understand what you're investing in and understand what you can afford to lose. And I've read, some of the Twitter threads, and it's heartbreaking, because there are some people who didn't really follow that rules and have lost a lot. Yep. And, it's sad. It really is. Yeah.
And then on top of that too, with, the NFT world, which you can get into a whole bunch. So it's definitely a big world. One of the things that I said a little bit ago is, if you're going to step into it, do some deep digging, do some actual research.
Mm-hmm.
Don't just listen to some Twitter people and do some crazy stuff. And it's, it's definitely out there, and obviously in the States it's big too. But really appreciate your time jumping on and sharing with us today. If people want to, check out some more, obviously you can check out Easy Crypto, do a bit of digging there. But this world of digital assets is obviously a real thing. It's going to be, these drawdowns happen up to 85% time and time if you look at the history for it. So appreciate your time joining in. Really thanks for the time, Paul. Legend.
Appreciate it. Thanks, Robert. See you.
Rock and roll. All right, that was Paul Quickenden from Easy Crypto talking through the stock market that's going on right now, and also a little bit of the world of crypto. It's obviously new stuff. Definitely be doing your own research. It's a crazy world out there when it comes to digital assets and all sorts of bits and pieces.